Injective protocol, or the INJ token, is on an absolute run, and for good reason. This does not seem to be market manipulation, there seems to be real activity happening. Today the price is up 5%. In the last week it's up 50%. In the last month it's up 72%. And in the last year more than 500. What's going on here? Some metrics are a bit odd. The USP, the tagline, is that Injective is the blockchain built for finance. But when it's a blockchain built for finance, why is the total value locked, according to DeFi Llama, that small? Less than 20 million across 4 different decentralized applications. My first hunch was that maybe this is price manipulation, because what very often happens is that whales buy up the token in order to then manipulate the price up and down and induce short selling by retail. So when a lot of short sellers bet on falling prices, that's then when the whale can buy up more, liquidate the short sellers and make money on the derivatives market. When that happens, then usually we see funding rates on those derivative contracts go up. But that's not what we are seeing for Injective. The funding rates are pretty modest. So it does not look like we've got some manipulation by whales here. But the ecosystem of Injective doesn't look that impressive either yet, right? We've already seen this on DeFi Llama. But here's the first positive point. Look at the development on GitHub. There is real activity. 7 hours ago there was a commit on Injective TS. 13 hours ago on the Python client. Yesterday you've got updates made in the Rust programming language, etc. There's real activity, real development happening. This is not by any means a dead project. And here's something we also rarely see in a bear market like this: a growing Twitter following for an altcoin. I haven't seen this for any of the prior altcoins I was looking at. For Injective, we've got it, a growing Twitter following. The number of users in their Telegram group is also growing. And this is all happening while circulating supply isn't expanding that quickly. Only around 7% per annum. Which is interesting, because according to the Explorer, you can get 16% APY on staking Injective. In other words, somehow the inflation of the token seems to be lower than the staking reward. Normally, the staking reward is paid via inflation. It looks like that's different for Injective. Now, the price of the INJ token did not always go up. This is the rally we talked about at the beginning of the video, but we did see quite a bit of a crash as well. A 95% crash, to be more exact. So it does make sense to try to ride those waves to a degree, maybe with a simple moving average. Then the question is, what's the best duration? This here is a 200-day. We could reduce that duration, right? And as we go down on the duration, this is a daily chart, we see that the moving average gets closer and closer to the price. In other words, when we turn bearish, for example over here, we do this earlier and earlier. And the same is true when we turn bullish, right? We are closer to the price. We take those trends a bit quicker. But as I go closer here, right? As I reduce the duration, we also get more failed signals. So for example here, for the 100-day moving average, now the price is going above and below all the time. It's not that easy anymore to time this, right? You would end up buying high and selling low and buying high again. So what's the best duration here? We can simply eyeball this. We can also backtest this. I will show the backtest right after this, but I want to show one more thing. Instead of looking at Injective in US dollars, we can look at this relative to Ethereum. And now see what happens. Let's say we take the 150-day simple moving average. We don't have a lot of failed signals here anymore, right? And we follow these trends relatively closely. Once we look at the US dollar price, we've got more failed signals. For example, over here or over here. So the volatility measured in Ethereum is a bit less than measured in the pure US dollar price. And that does make sense. Every altcoin is correlated with the overall crypto market. When Bitcoin and Ethereum is going up, then the altcoins are likely going to go up as well, and vice versa. So what's really interesting with altcoins is the idiosyncratic movements. How is an altcoin moving relative to Bitcoin and Ethereum? What are the price movements specific to the asset, the price movements that are not caused by the rest of the market. Now, once you remove the overall market volatility and you just look at the relative valuation to Bitcoin and Ethereum, the volatility of the price tends to go down. It also makes sense theoretically, right? Because when we invest in an altcoin, we want to get outperformance versus Ethereum and versus Bitcoin because we take on more risk, right? Injective is smaller in market cap. You take on more risk compared to Bitcoin. So more risk should equal more reward. If you don't get more reward, more return, then why take on the additional risk? Now we can look at a relative valuation chart to Bitcoin or to Ethereum. I personally prefer relative valuation charts to Ethereum, even though it's less common. And the reason for that is, again, correlation. Look at this. This is a correlation matrix of several altcoins relative to Bitcoin and Ethereum. So correlation to Bitcoin is here on the first column, the correlation to Ethereum on the second. And these coefficients simply mean how much do two assets move in the same direction at the same time. When it's at 1, then the price movements of one asset always move in the same direction as the other assets. When it's at 0, then the two variables are completely independent from one another. When it's at -1, then it means when asset A goes up, asset B always goes down. In other words, the closer we are to 1, the more the prices mimic each other. So I want to look at relative valuation charts that have high correlation to one another to distill these idiosyncratic movements. And when you compare the numbers here of those different altcoins and the correlation coefficient relative to Bitcoin and relative to Ethereum, we see that the numbers here on the second column tend to be larger than the numbers on the first column. So Ethereum is better correlated to the altcoins than Bitcoin is. That's why I prefer relative valuation charts to Ethereum. Those tend to reduce the overall volatility of a chart more. And so that's why I look at Injective not in US dollars, not in Bitcoin, but in Ethereum in this chart. And if we simply just eyeball the best moving average and we want to take away maybe those two failed signals here, we can increase the duration a bit further until those failed signals go away, right? We still have this one over here. We increase it, we increase it, we increase it. And there we go, 188 days roughly seems to be a pretty good gauge for the Injective to Ethereum chart. Which would then mean with this current rally that we'd still be bullish even if the price underperforms temporarily Ethereum by 36%. That's a potential danger with buying into rallies like this, right? You can't set the stop loss too tight because general overall momentum is still bullish. I did make a backtest on the US dollar based chart. That's this one over here. So on the x-axis, we've got the duration in days. On the y-axis, we've got the annualized return. The best simple moving average just mathematically is the 24-day. The best exponential moving average is the 137-day. So of course, we've got failed signals in both of those because they are shorter in duration. But just in terms of performance, those had been the best. So here, this is the performance over time on a logarithmic scale again at 10x from one another with each of those horizontal lines. White is Injective. Turquoise is the backtested performance. We do have 0.2% trading fees in here and we do bet on falling prices whenever the price is below the moving average. But yeah, those are the backtested results. So if you're not keen for a 36% underperformance and you're looking for an exit a bit earlier than this, then simply just take the 24-day simple moving average. That's over here. But again, you're trading much more actively here and you do have your failed signals. But currently that moving average is at $8.30 roughly. So the drop here is not that much less actually. It's 30.4%. Let me know what altcoin to check out next. Join our Telegram. Link is down below.